What's up, everyone? As you can see, Bitcoin has broken above the key level that I mentioned on my show 2 days ago. So what does this mean? Could this potentially trigger a bigger rotation into altcoins? Obviously, Q4 has now officially started yesterday. So what am I expecting for this quarter, which is historically one of the strongest quarters in the market? And what is my trading strategy for this period? That is a question I'm going to be answering in today's video. It's basically going to be a full Q4 guide to make sure that you are fully prepared for this next period in the market and have all the essential information that you need to know. Towards the end of the video, I'll be looking at some of the altcoins that I think are going to outperform in Q4 and give you an idea of some of the narratives that I'm looking at. I've also got some updates on some coins that I mentioned a couple of days ago. So make sure you subscribe to the channel for regular crypto updates. Remember, as usual, these videos are not financial advice. I'll leave the full disclaimer and information in the description below as always. And without further ado, let's get straight into the video here. So just looking at Bitcoin, the key level I mentioned that we needed to flip was this resistance zone at 116K. And I think it's now official that we can say this is a market structure shift. So on the 8-hour, you'll notice we were in this downwards channel for quite some time. I said that to actually convert this downtrend into a potential new uptrend, we had one of two signals, which was a higher low, but we needed a higher high. And that is now what we are starting to get, not only on the H4, on the H8, but also on the daily chart as well. We had a daily close above that level, which is a very good sign. Now, it would be a healthy thing, in my opinion, and there is a scenario to actually come back down and sweep some liquidity in this zone. So maybe we move a little bit higher, sweep liquidity here, potentially deviate, reclaim, and then push towards highs. I don't know if we have the steam to break all-time highs right now on this run. Obviously, you never know, but that is definitely a potential scenario I'm keeping my eye on, and it's also a scenario that Paradise has outlined as well. This is one of his posts from the Discord. There's a daily FVG at around 114K. If that doesn't hit, however, and I think it's on that retest if we got it, you could definitely look at starting to add two positions. If it doesn't hit, however, you just want to see where the market actually consolidates, because you want to see especially what this reaction is like to highs. So I guess there's two scenarios on Bitcoin. Either we come down and sweep first, or we test the highs and then we come down. But usually I'm doing most of my buying on major dips. And we'll get into how I'm actually playing the altcoin market later in the video. I've also got some great portfolio theory that I'm going to talk about later in the video that can help you when actually managing your risk and structuring your portfolio. So stick around for that later. So this is a potential scenario. Paradise also had a very good day in the Discord, hitting a banger trade on XMR. So Mars High Club members have been eating pretty well. We're at an interesting moment for altcoins where a lot of altcoins in the market aren't performing that well, but the ones that are performing are really ripping. So it does show you that there is still risk appetite in the market to concentrate into and speculate on certain coins when the narratives align with technicals. So this market is definitely favoring the traders at the moment, especially those who are able to breakout trade. There's actually a very interesting breakout trade setup that I'm very interested in, which I'll run through later in today's video. But just on the market as a whole, we're having this Bitcoin rally. This comes at the same time that we are seeing a upswing in Bitcoin dominance. It has reached a little bit of resistance here, and we started to see Ethereum and some of the major alts beginning to move today, which has resulted in a bit of a rejection. But I do think balance of probabilities, we see liquidity further concentrating into Bitcoin, and I think this does break and potentially put Bitcoin dominance back into this 60 to 65% zone. Now, you may think, oh, this is a bad thing for alts, but actually, this is a very good thing for alts, and this is exactly what I discussed in my walk and talk when I walked along the beach on Sunday night and I gave you my thoughts about the market. Remember, I said that we had that rotation from Bitcoin into Ethereum, into Solana, and then a little bit into alts, but then I thought the market needed a clean reset where liquidity concentrates back into Bitcoin, because it's very important that we have a strong Bitcoin to lead the rest of the market. So if you're holding altcoins or if you're interested in trading altcoins, you should definitely be rooting for Bitcoin to head higher and higher and break all-time highs and follow the gold trend that we've seen, which has been so strong, because that is going to not only be good for crypto sentiment, but it's also going to give the market the necessary liquidity and also anchor prices higher, so we can actually see that rotation happening from Bitcoin back into ETH And the ETH rally is actually what triggered alts running last time. It's typically not Bitcoin running. There's less of a wealth effect with Bitcoin because it's so ETF dominated these days. But the Ethereum rally certainly did light up the markets around a month and a half ago. So that is something that you would be looking for this time around to trigger a broader altcoin run, but we'll discuss that later in the video. As I said in my Discord update that I did yesterday, I said this potential shift in the Bitcoin trend is a very necessary and good thing for the market overall. Given the fact that liquidity needs to concentrate to pave the way for the next run, alts will likely lag until a new Bitcoin high is in, with specific outliers. Don't be surprised if this is the case for a few weeks. We really do need a high on Bitcoin though, and Q4 would be the perfect time to do it. This actually ties into my thesis that Bitcoin has been lagging gold and needs to catch up. After that catch up, you'd likely see the same Bitcoin to ETH to Solana rotation that we saw last time. ETH BTC is actually a very good chart to watch on the H4 and the H8 to monitor this reversal. I'll actually show you guys exactly what I mean. If you look at the Ethereum Bitcoin chart on the 4-hour and the 8-hour, these trends are very important. So right now, you can see that we are in a downtrend overall for Ethereum Bitcoin on the 4-hour and the 8-hour chart. It is at a bit of a support level right now, so you may see impulse to the upside, but it's the overall trend you want to keep an eye on. And just like that Bitcoin downtrend, the trend is your friend until the end of the trend. So you would actually need to make a higher high in order to assert Ethereum dominance again. Until then, balance of probabilities are going to keep going down until we eventually find a floor. But if you actually zoom out, this retrace is pretty normal in the scheme of Bitcoin Ethereum. We might dip back down into this pocket, but overall, I do think Ethereum Bitcoin is bottom for the cycle here. So even if we do see a little bit further downside, I think this is just a higher low before the next leg, potentially to the mid-range for ETH BTC. So this rotation is exactly what you want to see, with liquidity concentrating back into Bitcoin. And I do these regular updates in the Discord to keep you guys updated just on my mindset around the market and, how I'm feeling and what I'm actually spotting in the market. This is my Crypto Alpha channel. So we've spoken about gold going higher, and that's clearly been one of the triggers for the market at the moment. But the interesting thing is that when gold has big rallies, typically Bitcoin ends up recorrelating at some point. So I just wonder whether this big run on gold is eventually going to be caught up to by Bitcoin, and whether Bitcoin is just lagging gold. They oscillate. Sometimes Bitcoin leads. When it does, gold typically catches up, and then sometimes gold leads, and then Bitcoin typically catches up. So this does give me some confidence that it anchors the price for Bitcoin higher, and this is a sentiment that I've been echoing over the past few weeks if you've been watching my shows, but it's definitely something to look out for. And now we are starting to see a tangible move of Bitcoin actually outperforming gold over the past few days. The stock market has also been tearing higher and higher, creating new highs, despite the fact that we are seeing some sort of a US government shutdown at the moment. Even though that adds drama and adds storyline, historically, if you look at the data, stocks don't tend to care about these shutdowns. You can see that they can take a tad off GDP, but the comebacks typically happen very quickly when these government shutdowns occur. So the stock market tends to take these shutdowns in its stride. Seasonality wise as well, typically when we've had a strong start to the year, a strong first 9 months to the year, 14 out of the last 15 times, the stock market has actually closed green in Q4. And this year, I think we're up 13 to 14% so far in the stock market. So that indicates, based on the data, Q4 should be a bullish end to the year. Of course, it doesn't mean that it needs to be a bullish end to the year. You can see drawdowns. It could go up like this and then come down. You don't necessarily know. However, we're just looking at the data, and the data does suggest that's more likely to be the case than not. And I think you can also assert that based on the current trend of the market, which is firmly in an uptrend. So that also bodes well in terms of seasonality and in terms of the current trend on the stock market. An interesting dynamic as well is the fact that we are continuing to get rate cuts. So this does suggest that the business cycle is in full effect. Of course, you would have to reconsider that once we can assert that rates have put in their cycle low. But you can see that the next meeting is set to cut rates, and then the meeting after that is set to cut rates again before potentially things slow down. So as long as rate cuts continue to happen, this continues to add fuel to the fire in terms of the continuation of the overall business cycle. Now, before I get into my strategy, and I want to go into my portfolio strategy and some of the altcoins that I'm looking at for Q4, I want to talk about the sentiment at the moment. because I think Jason Choi's post here does do a good job of summarizing how a lot of people feel about alts. Despite Bitcoin rallying really hard, I think most people that are trading or holding or are involved with altcoins aren't feeling as bullish about altcoins right now. And I want to read out this post because I think it sums up where things sit. As Jason says, everyone was universally bearish at a traders cocktail hour I attended last year at Token 2049 in 2024. This time around, sentiment is much more mixed. Everyone is bullish Bitcoin long-term, parroting the same thesis, but no one managing consequential amounts seems to have any actual conviction for anything else in crypto long-term from these price levels. Obvious that most representative group of survivors with meaningful capital are traders. This is what I mentioned earlier. It does really seem like a trader's market because people that are trading typically have exhibited better risk management versus holding and investing, which has meant they were able to protect themselves from downside a little bit. And because the, I guess, default state of altcoins has been dilution, and overall that has led to token prices going down, I think the reason we're seeing a lot of traders still around versus investors is because those were the people that were actually able to survive this period in the market. And we all know the number one constituent of success in crypto is survival. It's your ability to just stay in the game, because we know how many opportunities come around if you are actually able to stay in the game. Aster a couple of weeks ago was an example of that. So it does make sense that the traders are around, as most product talk is about perp dexes as well. Lots of discussions about Hyperliquid, Binance's response, and next players. Pockets of wholesome attempts at earnest innovation in DeSci, deep in but rare. Market views are 50-50 split with credible reasons on both sides. Bulls, easing monetary environment, Bitcoin, coiled spring lag in gold, as I mentioned earlier in the video, and will drag market up. Revenue meta generally much healthier than meme coin meta and could last longer. I also agree with that. Bears, because I think it's important to look at the bearish side as well. Hot ball of money evidenced through hype, Aster, XPL, no new net inflows, still no net new experimentation that inspires confidence. That's obviously a slow bleed outcome and end of cycle phenomena. So I think there's a lot to unpack here, but I do agree actually with both camps, the bulls and the bears. So I definitely agree because we're in an easing monetary environment. I do think Bitcoin is a coiled spring and should make a new high. My thesis hasn't changed since April on that and will likely drag the market up. And I also think we are seeing an innovation of products now, which is extremely interesting. A lot of stablecoin protocols, which are interesting. A lot of heavily backed protocols, which are generating a lot of revenue, which is very interesting. And I think to a lot of people, that stuff is more interesting because it's, based in tech and fundamentals than the meme coin meta of last year. But because there's not that much new money coming into the market, and because there's still a lot of altcoin dilution, especially all these new launches, they're only adding more altcoin supply to the market. We aren't seeing, I think, the bullish fundamentals for maybe Bitcoin and as a byproduct of that Ethereum and Solana necessarily reflecting in altcoin prices. And when you actually look at the flows for a lot of altcoins, the average hold time is being quite low. We're seeing liquidity ping-ponging around altcoin to altcoin. It's almost like a bit of an altcoin popcorn market. If you are able to catch a bit of popcorn, you'll make a lot of money. But people are, trying to go around catching pieces of popcorn, missing other popcorn. Like, that's really what's happening. The market's popping all over the place, but it's, is hard to catch these moves. And because of that, I think the game has become a little bit harder for retail, or significantly harder for retail, because the default act of just holding altcoins and seeing them go up massively in price becomes harder when the market is kind of working against you because the altcoin supply overall is diluting. So this makes me feel two ways. It makes me feel bearish for the old approach of just holding a bunch of altcoins and hoping they go up. But it makes me feel bullish on the new approach, which is staying really in tune with the market, looking at the new narratives, looking at where liquidity is concentrating and betting on those trends. I think the investors that do that will make more money than ever, and the investors that follow the old approach will continue to underperform. So I built a segment today to dive a little bit deeper into your strategy, and I misspelled strategy, that's not a good start, for actually playing this quarter in the market. The first, I think, philosophical thing to understand is you don't need to be right that often in crypto. Everyone's trying to hit a trade every day, every week, even every month, but you actually don't need to be right that often. You just need to size up when the odds are tilted in your favor. Now, when I say size up, I don't mean take on a bunch of unnecessary risk or, gamble your money. I'm saying when the stars align on a trade, you need to trust your gut and back it with conviction, because it doesn't take that many trades to change your fortune. It just takes the correct position sizing on select trades to change your fortune. Remember, a few trades a year or one trade a year could change your life. My biggest trade of the year was Asta. I had no idea 3 weeks ago that I was going to hit that trade. So if you talk to Miles 3 weeks ago, he had no clue. He was days away from hitting his biggest trade of the year. So this just emphasizes how important it is to stay in the game, curate your information sources. By the way, that's the entire reason why I started Mars High Club, because we've curated the information sources amongst me, amongst Fabian, amongst Doc, amongst Surf, amongst Morin, all of our analysts to give you the best analysis in the market. It's very important that you stay in the know during this period. You understand what's happening. You understand what narratives are at the focal point of the market. If you stick to the process, you significantly increase your odds of succeeding in this space. So you need to be patient. Your default stance shouldn't be to risk capital or to be fully exposed to the market. Like, you don't need to be fully exposed to the market. You just need to do what you need to do to stay in the game. You need to stay engaged. Whatever systems you need to build around that and gamify to stay engaged, do that. So you're actually around and on the lookout for these opportunities. Just as I didn't know 3 weeks ago that I was going to hit my biggest trade of the year, dollar-wise, I don't know that potentially tomorrow or potentially early next week I could hit my biggest trade of my life. Like, I don't know that, but I'm in the game every day. I'm researching every day, making videos every day. I'm in Discord every day. I'm in Telegram every day. I'm in my WhatsApp research groups every single day. I'm just there. I'm just showing up. It's kind of like an athlete or going to the gym. You just show up every day, and the next day, and the next day, and the next day, and the next day, and you just compound bit by bit and just get 1% better each day, 1% smarter, learn 1% more, refine your system, and constantly reflect on that system. And that's ultimately how you succeed in the space. Now, I'm not saying that you will be able to do this or that this math is even remotely realistic, but I think it does do a good job of putting in perspective how much closer you are to your goals than you think. And it's this: you're only 10 2x's away from being a millionaire. So that means you turn 1K into 2K, 2K into 4K, 4K into 8K, 8 into 16, 16, 32, 32, 64, 64, 128, so on and so forth to a million. You're only 10 times or 10 trades away from that. Now, of course, with the laws of position sizing, if you're a high frequency trader, you'll only typically go in with like a max trade of 1% per trade. If you're a high conviction investor or swing trader, you might push 5 to 10%. There's been times where I've gone as high as 20%. Now my rule is 5 to 10% at the absolute max. But I think what this highlights is the power of compounding. So maybe in practice, this 10 number is unrealistic. It might be 100 or 200 trades. But it just shows you that if you compound, and obviously you would do it in a more reasonable manner than this, you can actually compound a small amount of money into big fortunes over time. I think the way I think of the market in general is you're just trying to take small bet, small bet, small bet, small bet, and you're trying to compound those bets so you can increase your bankroll slowly over time. And then eventually you're going to be trading with a much bigger bankroll. And that's where you can, size into the market, let's say during a bear market or during a big dip. Now you have liquidity and firepower to actually come in and capitalize on that. So I think to do this, you need to stop forcing positions all the time, and you need to curate your information sources, and you need to stay in the know, and you need to stay engaged, and then you will be able to compound over time to build up the bankroll that you need to really succeed. Now, one strategy in the market is, you could be fully out of the market, 100% in stables, and just pick off certain opportunities. And then the other strategy is you can hold a portfolio and then keep some liquidity on the side to take advantage of opportunities. And I do recommend for the average person, they split the two unless you are extremely in the know and you're able to just trade. But a lot of people don't have the ability to, trade full time. Of course, people have jobs and other obligations. So you can't just trade all the time and be as focused as someone that is doing that. But you can put together a portfolio which helps you attract upside whilst minimizing downside risk. So this is an example of a portfolio. You could have 50 to 75% in large caps, so major stables, low risk plays, think Bitcoin, Ethereum, moving down the risk curve a little bit. You've got Solana, you've got some tokens I'm about to speak about in this video, potentially like an ENA, Mantle. These have been very strong coins this year that you can look into. Tau is a top AI coin. There's another one I'll mention later that I'm bullish on. So there are some large caps you can use to kind of anchor your portfolio. Then you've got your mid caps. These are your sector leaders. Maybe in here you'd have an RWA coin. Try and keep your portfolio as small as possible. Maybe an RWA coin, an AI coin, potentially. There's some other metas to look into as well that probably will crop up more in the low caps or riskier plays like, robotics and on-chain and prediction markets and all that kind of stuff. But mid caps are your sector leaders and your ecosystem leaders. And then with 10 to 20% of your portfolio, you can throw a lot of darts. So my general framework for building a portfolio in crypto is hold less tokens in the mid and large cap sections, maybe 5 to 10 tokens. And then if you want to have some dart throws, if you want to spray and pray on chain, do it in a separate wallet and do it with 10 to 20% of your portfolio. The way that I'm currently playing the game right now personally is I have a portfolio structured pretty similarly to this. Actually, let me know if you want a portfolio video. I can dive a bit deeper into how it's actually constructed. So I've got a portfolio like this, but I actually don't include stables in my portfolio weightings. I have an equal amount of stable coins on the side to match my portfolio value. So let's say my portfolio is worth hypothetically $1 million. I have $1 million on the side in stables. So it's the equivalent value of my portfolio, basically meaning I have a 50% stablecoin weighting right now. Now that's quite aggressive. That's a lot of stablecoins, I think, for the average person. And I'm not necessarily condoning that you would do the exact same, but I'll explain why I do it. I do it because I know the way I trade, I need liquidity to be able to go in on high conviction opportunities when they come around. Like, I don't know if I would have been able to take the position I did in Asta if I didn't have enough liquidity on the side. If I was too overcapitalized in positions, potentially I would have had to have sold stuff off at inopportune times and created too much friction for myself to be able to take advantage of that opportunity. Clearly, also, the less money you have, the more if you are, trying to achieve big portfolio multiples, you'll need to naturally take on more risk. So you might hold more lower caps, more risky plays in order to achieve the goals that you want. But just keep in mind that if you are going to take on more risk, you're also going to open up the risk of losing money. So I think if you're going to play that game, it's very important that you have pretty strict invalidation on your trades. And I think this is also a good piece of alpha. You shouldn't think of investments as investments. You should think of all your investments as trades, because the reality is every single one of your holds is a trade. So even my long-term Bitcoin holdings are a trade. It's a trade that I think Bitcoin will outperform the US dollar over 10 years. So every single trade has a time frame. I think just be very clear with yourself and honest about yourself what that time frame is. There are some altcoins that I hold where my time frame is 2 to 3 weeks. There are others where it's 2 to 3 months. I think having a time frame on a trade as well as an invalidation is super important, because it's going to protect you from bag holding onto that trade for too long. And I think a lot of people, they just hold altcoins and they don't really have any idea over what time horizon they're holding that altcoin. You can even play sector dominance altcoin holds. For example, ENA, I've got some of this in my longer term portfolio, but I was in multiple ENA trades for periods of time over the past few months because it was in an uptrend. And I said, as long as it's in an uptrend and as long as it's outperforming, I'm happy to be in this as a short-term trade. And then the second it starts underperforming, I'll look to cut it, as well as obviously TPing on the way up. So you can even split your bags into two halves. Like if you bought ENA, you could split it up into, 50% might be with a 3 month to 5 month time horizon. And then the other 50%, I'm actually trading based on these conditions. So obviously, you can overcomplicate things and get crazy with it. But I think the bottom line is have a time frame validation and invalidation for your trade as well, alongside, a pure number validation. And another reason why I'm holding a lot of stables right now, it's not because I'm bearish, actually. People might think, it's because Miles is bearish, so he's holding a lot of stables. It's more so the fact that towards the end of a cycle, and clearly there's some room to run on Bitcoin, we've already discussed that just based on how the chart's looking, but as you head towards the end of the cycle, typically you want to be, as a general rule, dialing up the risk in your portfolio, because the explosive part of the cycle is typically where those riskier plays really come to fruition and can really give you outsized returns. But you want to be dialing down the stakes. So people get this the other way around. Like as the cycle heads further and further towards its end, people tend to dial up the stakes and the risk, but that doesn't actually make sense, because if you're going to get into riskier positions, you need to counterbalance the risk reward on those trades by putting less capital into those trades. So I guess the reason as well I'm holding more stables is because I'm dialing up the risk. So I am taking more on-chain bets. I'm taking more high conviction trades. I'm looking into all of that stuff, but I'm counterbalancing that with a heavier stablecoin weighting. So you just have to decide, what you need to do to make it work for your portfolio and your goals. And if you are going to do that, you might be thinking, oh, wow, I've got to do some rebalancing of my portfolio right now. I've got a framework for you. I think a question and a comment that I get a lot in the Discord and I see in the YouTube comments, people are always like, oh, I'm not bullish on this, but I don't want to sell at a loss. Or, oh, should I wait for this to bounce before I sell? The reality is, the best time to rebalance your portfolio, if you don't have conviction in a holding, is now. The best time is actually a month ago. The next best time is a week ago. And then the next best time is now. So I would really urge against holding altcoins just because you're underwater. By holding an altcoin, or any asset for that matter, you're basically committing, tax implications aside, just assume there's no tax, you're basically committing to buying that position at the current price, because you're effectively saying, if you're holding, let's say Asta at $1.50, you're saying, I am bullish on Asta as a buy at $1.50, as a long at $1.50 rather, because you're still actively in the position, so you're still actively net long at $1.50. Whereas if you wouldn't put fresh capital into longing that position today, then that's a sign that potentially you shouldn't be in that position. And that's where I use this overnight test. If your position was magically liquidated overnight, would you buy back that position in the morning? Would the first thing you do is go onto your phone or computer and buy back that position? If the answer is no, then you probably shouldn't be holding the coin. If the answer is, oh, I'd buy back half, then maybe you just buy back half the coin. And the other thing is, pair trading is also something important to wrap your head around. Opportunity cost is a very big thing in crypto. If you're holding Ethereum, but you think Bitcoin's actually going to outperform, you've got to ask yourself why you're holding Ethereum. So you have to, and this is a way to condense your portfolio down. I spoke about only having like 5 to 10 core positions. Maybe you have 20 positions. What you can actually do is you can start condensing things down by just asking yourself, would I rather hold this token or this token? Okay, I'd rather hold this token. So you combine them. Or you weight down in one token, you weight up in another token. And you can keep merging them together so you consolidate your portfolio towards the assets you're truly bullish on. Obviously, have max allocation percentages predefined and all that stuff, so you don't over allocate in a certain position. But don't just hold a position because it's underwater. Be very, very specific and have a plan for every single position in your portfolio. And this is actually something I help my Discord members with as well. We have a channel called Questions for Miles. People can ask me questions at any time. I answer every single question every single day. So if you want FaceTime with me, and if you want to ask me some questions, not financial advice, of course, I'll just give you my personal opinion. You can ask about a token. You can ask what I'm doing with a token. As you can see, I go through every day and I answer a bunch of questions. These are all members who are asking questions in my channel, and I audit this multiple times a day, and I give you my thoughts. And this is also where I can update you on when I'm changing positions, because the reality is sometimes I'll make a change or a tweak to my position, like I do often, because I'm constantly rebalancing things, and that's the place where I can inform you guys the most effectively and the quickest. So I'll leave a link in the description below to the Miles High Club if you want to join and be a part of the community. I truly think we've built the best community in crypto, and especially for Q4, if you want to lock in, that's the place where you really don't need that many other resources. We have a curated X feed that our researchers are curating for you. We have curated analysts, which I've hand selected, and all have built their own strategies in the market to curate the information for you. So you don't need to spend hours and hours going through YouTube and Twitter and just exposing yourself to all this noise. It's just a hub you can live in with other traders, with other like-minded people. And I think that's so important, if you want to really succeed in this market. So now we've talked a bit about strategy. Let's quickly go through some narratives to look out for. I did a narrative video a couple of days ago, but I wanted to give you some updates. XPL, I did an update on this in the Discord. I actually stopped TWAPing, so DCAing into this, just because I don't like the fact it's in a downtrend. But I do think stablecoins are an interesting narrative for the quarter. So the position I bought, I'm going to hold on to. I'm not going to add further to it, but I am interested if it forms an uptrend again, and I'm looking at the 1 hour and the 4 hour to potentially add a position on dips. But I'm just waiting to see if we can get a little bit more clarity through the price action. If you want a free trade on XPL, by the way, you've got one more day to claim your $15 free trade using the link in the description below to Blofin. There's no strings, there's no deposit bonus. You can get a free trade, either 5x, 10x, or 20x leverage with $15. So if you take a 10x leverage long at $15, that would be a $150 free swing at an XPL trade. So if you do want a bit of exposure, there's 1 day left on this. Link in the description below as well. Another stablecoin protocol, which is at an interesting zone in terms of risk reward right now, is Stable. The one of the OG co-founders of Tether is actually the founder of this project. It's one that I also invested in the seed round, but I've added a little bit more liquid since then. This is back down to a key demand zone. You would want to see a bounce here. So if you are interested in the token, obviously you've got clear invalidation below 30 cents, and potentially this is the zone to look at. We are seeing a bit of compression, so there's potentially a breakout trade as well starting to form. Of course, it could break to the downside, so you'd need to, cut if that happened, but there's also a breakout trade to the upside here. So very interesting zone, but more importantly, fundamentally a token alongside XPL that's interesting under the stablecoin narrative, which I think is going to be one of the dominant narratives of Q4. Another one's ENA. We've spoken about this a lot. It kind of was in an uptrend, but momentum has started to flip a little bit bearish. But this is starting to recover. So especially if we get a flip of the money noodle, I would potentially look at a new long. Now, this is part of my portfolio, my longer term portfolio, but obviously I was trading this a lot as well. So my position's smaller than what it was. I would potentially look at re-entering if it can continue to exhibit an uptrend, but it's only had 2 green daily candles. So we need to hold out a little bit for that before I pull the trigger on a new trade. Going on the point of stablecoins as well, I think something you should keep an eye on is Trump stablecoin and protocols and platforms that are associated to and with and powering the USD1 stablecoin, because I think the Trump administration is pushing it really heavily, Donald Trump Jr. specifically. So keep your eye on the top proxies. Aptos actually announced that they are the first move chain, so before SUI, to deploy USD1, and there's a bunch of applications, money markets that are actually accepting and allowing you to trade and leverage against and use the USD1 token. So I think ecosystems and applications that are leveraging that are a big narrative to look into. Interestingly, Aptos has a good trade right now. Paradise actually sent me this chart on WhatsApp this morning. He hasn't even posted it in the Discord yet, I don't think. This one is really starting to brew on the 3-day specifically. So a bit of a longer validation for this one. You might have about a week, but RSI looks really good. We're seeing a bullish divergence on RSI, and we're also seeing the chart potentially breaking out. So this aligns with the narrative. It's actually quite strong at the moment. Moving on from stablecoins, AI is another one to look into. So Fabian pointed out in his Altcoin Alpha channel, he's one of our head fundamental analysts, that there is 2.5 months left until the Tau halving event. Fabian says, I'm still bullish on Tau, picking up attention going into the catalyst, and like it as a swing trade for Q4 from these levels. It will likely be a slow cook until we get closer to the date, so will require patience, but timing is hard and price is currently at attractive entry levels. So I think slowly building a position up here makes sense with a time frame of 1.5 to 2 months for it to fully manifest. I agree with Fabian. Decent risk reward zone for Tau. Being an annoying and slow token, I actually swapped recently some of my Tau into Aethia because I think in the shorter term, so like let's say in the next 2, 3, 4, 5 weeks, I think Aethia could outperform, but I think we'll see that rotation back into Tau. So I am interested in the ecosystem. One token that I hold in the ecosystem, it's a bit of a smaller cap, so obviously do your own research and it's higher risk, but it's Inspect. They're actually one of the biggest mining pools on Tau. So they have over 200,000 miners on their Substrike pool. So it's become the largest collective mining layer on BitTensor. So at the market cap I think it's an interesting beta play. So obviously with beta players, you want to size them a lot smaller than the alpha play, but I'm just saying, if you're in a Tau position, you can look at barbelling like, 80, 90% Tau and then 10, 20% with the ecosystem. It's a similar strategy that I ran with Ethereum, 80% ETH and then 20% betas. Similar with Sol, you could have 80% Sol, 20% betas like Radium, Jupiter, etc. So just something to look into when it comes to the Tau ecosystem as well. Aethia, I commented on. The price action is really choppy. For me, the price action now is not that important. The price action that's going to be super important is in 2 to 3 weeks once the buybacks start, because that's going to tell us how much firepower it's putting into the chart. If we see active buybacks, but the chart really isn't responding, that would be invalidation for me, and my trade would be continued to be validated if the price action actually looks strong. The announcement sell-off is pretty normal. It's normal, buy the rumor, sell the new stuff. Honestly, I wouldn't chart this too much. I just have a range structure drawn out here. I wouldn't chart it too much because it's, a pretty choppy token overall because of the recent announcement. But I want to see what actually happens in terms of the chart's price action in a few weeks once these buybacks start. So for me, that is going to be really deterministic as to what I actually do with my Aethia position. But I'm already fully in the position for now. And then the last thing I think you should do is keep an eye on the big players in the market, because if you look at the biggest tokens at the moment, it's Asta, CZ's been pushing it. Plasma, obviously Paolo, the CEO of Tether's been pushing it. Trump, obviously, he's been able to push 2 ecosystems, World Liberty Finance and obviously the Trump meme coin. The best KOLs in the space, the best, I guess, movers of the market are these big, well-known names in the space. So a bit of alpha for you. And obviously this requires a speed edge. There's 2 types of edges in crypto. There's a speed edge and there's an information edge, an information asymmetry. I think there is a lot of merit to looking into and tracking influential crypto founders, or just founders in general, that are getting involved funding or talking about pre-TGE projects. This is something I'll be highlighting in my Discord channels. I also have a risky plays channel that I just launched for more of the riskier on-chain stuff. And then I have my crypto alpha channel, which is my general alpha position updates and any alpha that I come across in the market. This is something that me and my researchers are definitely looking out for, because it was the key, if you reverse engineer it, to actually hitting the Asta trade, and also the key to getting in the Plasma ICO, and also the key to hitting the Trump trade. So looking at these big names and their involvement in future projects, especially pre-TG projects, that's a big opportunity, not just from a liquid point of view, but also from a farming point of view, because we have seen some of the airdrops recently starting to get bigger. It seems like a bit of a renaissance on that front. So I think there are opportunities if you keep an eye out there. So hopefully you enjoyed today's video. I will see you in the next one. I'll leave a link in the description below to the Mars High Club. If you do want to join, come be a part of the amazing community we've got going over there. And I will see you in the next one. Have a lovely rest of your day as usual. Peace out.